So traders, I just want to share my strategy with you real quick. If you haven't watched my previous video where I talk about market structure and how the market moves, I think I named it how to make $100 or make a living with $100, but I will leave the link in the description. Just make sure you watch that video because this strategy will make a lot of sense once you have watched that video. But essentially, just to recap, we've explained that we have two types of traders in price action trading. We have what we call key level traders and trend traders. So this strategy is going to be focused on key level traders. So what we're going to be doing essentially is just be trading the key levels. Let's say the market is coming from the downside and all of a sudden it reverses without any evidence to the left. It starts reversing to the downside. If that happens, we know that that is our key level. We know that next time when the market gets to that zone, we are more likely to make money if we sell the market. If the market reacts to that level, we need to sell the market to benefit from this move to the downside. And if it gets back to the previous key level and react on this level, we're going to buy it back to the upside. So we're just going to keep doing that until the market breaks to the downside or to the upside. If the market breaks to the upside, we're going to wait for it to come back and retest, execute here, benefit to this move here. If the market breaks to the downside, we're going to wait for a retest to execute here and benefit from this move to the downside. That's all we are doing really. We're just trading the key levels either inside the zones or outside the zones. If the market breaks the key level without any hesitation, we're going to wait for it to come back and retest so that we can avoid fake breakouts and break in like that. If the market breaks to the downside, you wait for a retest, execute here to benefit from this move. Same thing with an upside. If it breaks to the upside, you wait for a retest and execute to benefit from this move here. So that's all we're going to be doing. It's such a simple strategy really. Now in terms of the candles or the candle patterns that we want to see when the market gets to these levels here, if the market is pushing to the key level here, well, that should be the second time really. If the market has reacted from this level before and we see the market pushing to that zone again, when the market gets here, I expect to see some form of hesitation. I expect to see some sort of depletion. I want to see the market failing to break that level. I want to see some loss of momentum. Or let's say the market is moving in there with such a huge bullish candle, and the next candle I want to see it's a red candle opposing that behavior, something like that. So if I see two candlestick patterns like that on that level there, then I'm going to be selling the market. If I see a huge bullish candle and a huge bearish candle, that means that bearish candle is assuring me that there's still some sell pressure there, and since it's a key level, then I'm going to go ahead and benefit from that move to the downside. I think this will make more sense when we go into the charts, but same thing to the downside. If the market is pushing to the key level, what I anticipate here is a loss of momentum on the market or some bullish behavior to show me that there are still bulls in this key level here, so that I can benefit on this move to the upside. And again, if you don't know candlestick patterns, I'm going to leave a link to that video as well. I've done a video about candlestick patterns because candlesticks are very, very important. If you're going to be a price action trader, you need to understand your candlesticks because this is how we read the information in the market. The candlesticks are our information in the market. So let's just go into the chart here. We're going to be back testing this strategy together. And since this is going to be completely random, we're going to be targeting 1 to 2, which means we're going to be anticipating the market to get back to key level, anticipating one of the candlesticks pattern to form in these levels here, and then we're going to execute a buy to the upside, and we're going to be targeting 1 to 2. Same thing with the downside. If we are selling the market, we're going to be targeting 1 to 2. Now this is to allow our odds to play out at the end of the month or at the end of the week, or however you balance your books, right? This is to make sure that we stay profitable because trading is a numbers game. If you take 10 trades, win 5 trades and lose 5 trades, that's a 50-50 chance, right? But if you are making $2 for every time you win, but you lose $1 every time you lose, then you just made a profit. That's all we need to do. We just need to balance our numbers. So we're going to back test this strategy together. We're going to take 10 trades. Maybe we're going to just go to a random period of the chart here, and then we're going to take 10 trades and see after 10 trades how much could we have made, or how many trades could we have won or lost with this strategy. Right now, if you check here, this is gold. If you're still new to trading, I wouldn't suggest that you start with gold because it's really heavy. I encourage you to go with one of the pairs like Australian dollar JPY, GBP USD, Euro USD, Australian dollar USD. You know, just pick any currency pair and back test this. Let's rather go to a currency pair like Australian dollar USD, right? So we're going to go back in them. Let me just minimize this just to make sure that there's no cheating here. So now that's just a straight line. I can see what the market is doing there, right? Today is what? The 22nd of February 2023. So we're just going to go back a year ago, 2022. Or let's just go back 2 years ago. We're going to go back to the same date today, 2 years ago. That will be the 2nd of February 2021. Let me just switch on my bar replay here. So we are looking for February 2021, right? That is exactly 2 years ago. So we're going to be back testing data from 2 years ago up until now and see how many trades can we come up with. Or we're going to take 10 trades and see how much could we have made. Okay, so now that's January. Now this is February here. Today is what? The 22nd. Let's just go to 22nd February. So random place 2 years ago, and we're going to start back testing the market to test this strategy. Now, if you still remember the strategy, we are trading the key levels, right? Let me just zoom the market so that we can have a clear understanding of what's happening here. All right, so we are not trend traders. We are not doing trend trading. We're not waiting for the market to break and retest and all of those things, right? What we are is key level traders, and as key level traders, we don't care about the trend. What we need to do when we get into the market is to mark our highest high, because that is our key level, and our lowest low. So this is what we're going to be doing, right? This is what we do when we get into the market. We mark our lowest low and our highest high. Now, if we look here, the market is breaking the level, is breaking the previous high. But it is possible to get a situation where the market will break back inside the market. So we can't mark this as our high currently. We can't mark that as our high because we don't know what's going to happen. The market is still pushing to the upside, right? So only when the market closes above the previous high can we then say this high is broken, and then we're going to get our second high. I don't want to confuse you here, traders. Simply what we are doing is when we get into the market is to mark our key levels. This is our lowest low and this is our highest high, and currently we see the market breaking our previous high, but we're just going to keep playing the market to see what really is going to happen. Okay, so I see some huge bearish behavior on these levels here. This might suggest that there's some sellers under this level here, but let's keep going because that's just one candle. We can't make a decision based on one candle, so we just continue. Oh, look at that. So now we're gonna move our high to that level there, because now that is our highest high. If you look here, the market just reacted heavily on this level here, showing us that there's a lot of sellers sitting there, right? So since our previous high has been violated and the market is coming to the downside, we're gonna wait for the market to come back to our previous lows. Now we're going to move this is going to become our new lower low, simply because our high has been violated, right? So this is our new low. We're just waiting for the market to come back to these lows here and see what's going to happen. If the market reacts on this level here, then we're just going to buy the market, right? Because we are buying the lows and selling the highs. If the market breaks this level, wait a second, where's my tool there? If the market breaks this level, we're going to wait for the market to come back and retest so we can execute here to benefit from this move to the downside. Now I'm explaining this because we're going to be doing the same thing over and over again until we get to our 10 trades, right? Or until we finish our backtesting session, right? So those are the two possibilities that I'm looking for. I'm looking for the market to get back to the highs and wait for it to react here before I can sell the market. If it doesn't react here, then the market is going to break, and I'm going to wait for that retest so then I can execute here to benefit from this move to the upside, right? So those are our two possibilities. Let's see what the market does. While the market is still within these two levels, we're not doing anything. We're only waiting for the market to get back to our previous lows or our previous highs. Okay, so now we are at our previous lows, and I like what the market is doing there because this shows some depletion. This candle here is telling me that, okay, there is not enough momentum to push the market below this level here, right? So I'm just going to observe and see what happens. If I get a bull sign, if I get a green candle showing me that there's bulls sitting there, then I'm going to take the trade to the upside, right? So we're just going to wait and see what's going to happen. You never want to be the first in the market because you don't know what's going to happen, right? You need to read the information that you get from the market. That's the most beautiful thing about price action trading. So we're going to continue playing the market, right? There we go. Those are some bulls in the market. That is telling me that, hey boy, there's some bulls up in this mother F. So then I'm going to take that and target my 1 to 2. Let me see. Let's cancel that so we can see where the market ends. So we're going to go for our 1 to 2, right? There we go. We're going to go for our 1 to 2. Now remember, traders, we don't know if this trade is going to win or it's going to lose. What we need to do is to let our numbers play out. If I take 10 trades and I lose 5 trades and win 5 trades, if my risk to reward is 1 to 1, I'm not making any money, I'm just break even, right? But if I win 5 of those and lose 5 of those, I'm going to be making money with a 1 to 2. So that's the importance of 1 to 2. It means every time we win, we're going to win $2, but when we lose $1. So let's continue and see if we're going to hit the take profit or hit stop loss. At this point, this is out of our hands. We've already taken our trade. It's now up to the market, what the market is going to do, right? And we just got kicked out. So that was a stop loss on our side. So let's say we just lost $1, right? If we are trading a $100 account, or we just lost $2 if we are risking 2%, right? So now we just lost the trade there, but I like that candle there because what that candle is telling me is that the market was pushing to the downside. The sellers were taking over, but there's bulls in that market, hence the candle closed as a doji like that. There's some bulls in that market. So for that reason, I'm going to go ahead and execute the trade again because it still shows me that I was right about the direction of the trade. It's just that my stop loss was too close, right? And there's nothing we can do about that. Once we are kicked out of the trade, we are kicked out of the trade, we just need to anticipate our second trade. So for that reason, I'm going to go for my second trade here. We've already lost 1 trade and I'm executing my second one. So let's see how this is gonna go, right? I'm gonna keep playing the market and see if we're gonna hit our stop loss or we're gonna hit our take profit. And again, at this point, we don't care what the market does. We are simply here to play the numbers game. Okay, I think we just hit our take profit. All right, so that one was a win. We lost 1 trade, but we won 1 trade. This means we're still in profit because if we lost $2 here, we just gained $4 here. So then we are $2 in profit, right? So we continue playing the market. Since this was not broken, our previous low was not broken, then it still remains our low, right? We're still looking to trade in between these levels. So now I'm only waiting for two things to happen here, right? I'm waiting for the market to either come back to these lows here, give me some sort of a reaction like it did here so I can buy the market back up again, or the market is going to go to the upside, give me some reaction here so I can sell the market. So that's one scenario, right? Either the market comes back here, give me a reaction so I can buy, or when we flip it to the upside, either it comes back here, give me a reaction so I can sell, right? Or another scenario, the market, instead of give me a reaction here, it might break to the downside. If that happens, I'm going to wait for a retest, then wait for a reaction here. If it gives me a reaction, then I'm going to sell it to the downside. Same thing for the uptrend, not the uptrend, same thing for the upside. If the market pushes and doesn't give me any reaction here and just breaks through to the upside, I'm going to wait for that retest so I can take a trade here to benefit from this move to the upside. So I'm just waiting for those two scenarios. Before that can happen, I'm not doing anything, right? I'm just going to stay patient and wait for the market to do what the market is going to do. Because remember, nobody knows what the market is going to do, right? It's all a fugazi. Let me stop talking too much. Somebody said on my comments that I talk too much. I must just get to the point. So thought that was really rude, but you know, people got some anger issues going on, man. Maybe I should just promote a free anger issues program in my links. Maybe I'll find something like that. But we just got to the previous level here. We just got to our key level. Now I'm expecting the market to react so I can buy the market back up, or just expect the market to break and I'm going to wait for a retest. Let's just see what the market is going to do there, right? Boom. Okay, so the market looks like it's breaking to the downside. Once that happens, all I'm waiting for is the retest. I wouldn't consider this a retest because it's too small, unless I get something like, you know, I get a huge pullback, give me some reaction here, then I can still sell the market to the downside, right? Or alternatively, I'm going to be waiting for the market to pull away again from that market and come back to retest, because the point is I'm looking for the market to breathe a bit, collect some orders, so and then come back to retest. So I'm not going to consider that a retest because it was just a too, you know, the bulls cancelled that move too early. I need some sort of a box in between the candlesticks. I'm not sure if you understand that, but yeah, let's just continue playing the market. Okay, so okay, we're breaking back inside. If I get a reaction there, I'm still going to take the trade, because this is a zone, right? This is a zone here. So if I still get a reaction there, if I get some bearish candle there, then I can still take the trade. But let's just see what's going to happen there. Okay, I like that, but I need some momentum in the market. I need to see a big red candle to show me that the bears are taking over the market, or to show me that there's still some bear action going on in that level there, so then I can sell the market. But if that doesn't happen, then I'm not going to take the trade, right? Boom, I like that. So I'm going to take that. I'm going to take a sell there, stop loss above structure, just above structure, and I'm going to go for my 1 to 2. Again, whether this trade wins or loses, that's not my problem. I'm just here to play the numbers game, right? Okay. Ooh, I like that. You see that candle there? So if these are the live markets, I'm gonna take that trade again, simply because this is more information that there's too much sellers in the market. So immediately I see that, I'm gonna take that trade again. And this means if we lose this trade, we're going to lose both trades, right? You just do that. We're going to lose both trades, but it doesn't really matter. I'm just here to play in the numbers game, right? But I really like that price action going on there. So I'm going to go for my 1 to 2 here again. And yeah, we're going to see how it plays out really. Let's just make sure it's a 1 to 2 so that we keep playing our numbers game, right? There we go, 1 to 2. So if we lose this trade, and then we're going to be losing both trades, but it is what it is. Let's just continue and see. Okay, looks like it's retesting. That's not good, but we're already on a trade and there's nothing we can do. Let's just see what the market does. Okay, so now we're moving to our direction. I like that. Bit of a retest is expected, but let's just see what's gonna happen, right? Boom. Okay, so then we won both trades. So how many trades are we on now? We took 1 2 3 4 trades, we lost 1 trade, and we won 3 trades. Let's just continue. We are left with 6 trades. We need to take 6 more trades so that we can balance our numbers, right? Remember guys, we're still gonna lose a lot of trades here, so just keep that in mind. Now the market just broke this level here. If you notice, this level just gotten broken here. I'm gonna keep that in just so I can remember if the market comes back to that level, then I can remember that that was a key level that has just gotten broken. So if I get some reaction then I can sell the market back to the downside again. But the market looks like it's coming back to these levels here. Remember, we are key level traders, so we're only going to pay attention to our key levels. If the market breaks this level here, then it looks like we're going to be coming to these levels here, right? If we break those levels here, we're going to be coming back to these levels here, because these are the previous lows, right? But that's just if the market keeps going to the downside. If it keeps going to the upside, and then we're going to find other key levels on the left. Let's just keep pushing and see what the market is going to do. Let's remove that and just keep moving. Okay, so the market just reacted back with some bull action, right? I wouldn't consider that a retest simply because I already explained here I need some room to place my box. So for that reason, since that has broken back inside, I'm not going to consider that a break of my structure or a break of my key level, because this is just because these two candles just cancelled that whole noise there, right? So this will remain my key level and this will remain my key level, meaning if the market happens to come back to this level here and give me some reaction, I can still take that trade to the upside instead of waiting for the market to come back to these levels here, because this was just a fake out, and you need to pay attention to the fake outs as well. This is what's beautiful about being a price action trader, right? You react to the current price action. You react to what's happening to the market currently, and that is such a beautiful thing. Let's just keep playing the market. Okay, so I'm not going to take that simply because it was, you know, I need some room again. If this is going to come back to react on these levels here, I needed a room to place a box. I need the market to leave that place for a while, collect some few orders, and come back to retest, and then I can execute here, right? So I'm not going to take that buy there, even though I see the bulls are taking over. If then the market continues upwards, then it is what it is. I've lost the trade. Well, I didn't lose a trade really, I just didn't take a trade. I'm just going to wait for another one. But let's just see what the market does, right? Okay, so then it left us. Okay, it is what it is. Let's just see. Okay, it's coming back. Okay, I like that reaction. If I can get a bullish candle, like, I will take that trade. Okay, that's even more better, because now my stop loss is going to be so small. If I get a rejection of that level there, I'm going to take the trade. Okay, no, I'm not going to take that simply because there's too much sellers here and this is not a full bullish candle, so I'm not going to take that trade for those reasons. Okay, the market is coming down. Okay, if the next candle can cancel that, then I would take that. But if not, there we go, I'm gonna take that. Now, even though it's not a full candle, I'm gonna take it because it's just a cancellation of that. So what this is telling me is that there's too much sellers in the market, so we don't have that week, essentially, basically, because now the market just cancelled itself. Same thing that happened here, right? So I'm going to take a buy there because I see that there's still some bulls in the market, and see what's going to happen. So we're going to go for our 1 to 2 there and see if we're going to take profit. If we do, we do. If we don't, we don't. It is what it is. Okay, I like that. Okay, okay, boom, we just hit our take profit. Now that's another one in the bag. Let's continue playing the game. If at this case we're waiting for the market to either get back to this level here or get back to this level here, either it's going to break this level or it's going to react so we can buy it again, or it's going to break and we're going to wait for a retest. One of the two. We'll just see what the market does, right? But we're not here to be wizards of the market. We don't know where the market is going to go. We're simply here to react to what the market is doing, right? Okay, so the market is pushing to that level there. If I get some that is a bit far, that is a bit far. I need the market to get deep inside that level because you see how far my wicks are. So I'm not going to take that for that reason. If it comes back down, then it is what it is. We've lost a trade, but I would expect it to go back to those levels there and react. Yeah, something like that. Okay, I need some reaction. I don't like that. It's not a full bear action, right? I need to, ooh, I like that. I like that. Now the candle is too huge, but I'm going to take that because it's our key level, right? It's our key level. I'm just going to put my stop loss there and I'm going to go for my 1 to 2. Okay, so as long as I can get to my 1 to 1 before our next key level, that's fine. As you can see, that's already 1 to 4, right? And that's just the key level. So which means if the market comes back to react here, I'm just going to close my trade in profit, right? As long as we can make a 1 to 1 there. But otherwise we are going for our 1 to 2 just in case the market does not respect that level there, because how the market is reacting at the moment shows me that there's too much sellers in the market. Oi, I don't really, that looks like too much of a range, but let's just not come up with excuses here. We'll just keep playing the game and see how the market reacts. Okay, we're pushing to the downside. Like, okay, so you see we're already reacting there. I expect the market to push without any hesitation. So because we're already getting some hesitation there, I'm gonna move my stop loss to take some of the profits in the market, right? So I'm gonna give it a breathing room so that if it comes back, then it won't take me out. Then maybe we can get something like that. But we already taken a few partial profits off the market. Let us just see how we're gonna do. Okay, so the market broke that level. I like that. For that reason, I'm gonna move my stop loss further to secure more profits, right? Let's see if we can get to our, ooh, I like that. So then we just taken profits on that trade there. Now the next thing that we anticipate the market to do is to come back and react on this level here, then push to the downside, or come to this level here and then give us some sort of a reaction for us to buy the market, or break and retest. Same thing, we just here to do the same thing day in day out, just trading our key levels, right? Let's just see what's going to happen. Boom, boom. Okay, so we're at that key level and immediately we got some reaction. You see that? I'm going to take that without any hesitation because these are some bulls in the market. This shows me that without a week, the bears were coming down, pushing the market to the downside, and without even peaking to the downside, the bulls immediately cancelled that action. So for that reason, I'm going to take that as a buy, and if I lose that, I lose it, but you know, it is what it is. We're just here to play the numbers game. So I'm going to go for my 1 to 2 and see how this trade plays out. It's okay. So we don't have a week there. We can just, you know, move our stop loss closer. Let us see. 1 to 2. All right. So we're going for 1 to 2. Let's see how that's going to play out. Okay. So I like that. We haven't hit our take profit yet, but let's see how it goes. Not yet. Oh, not yet. Okay, for that reason, I'm going to move my stop loss to break even, just in case the market comes back. If in fact, I'm going to take some partial profits, just in case the market comes back, because now it's rejecting that level instead of pushing through to hit my take profit or to get back to the previous key level. Let's see what's going to be what. Okay, so that's good. I like that the market has corrected that move. I don't like what's happening there. The market looks like it's finding some problems breaking through those levels. So for that reason, I'm going to move my stop loss further to secure some profits there. Boom. Okay, I like that. So we just hitting our take profit there, and we're just going to continue to see what the market does. Now the market is reacting to that level there. I'm not going to sell the market simply because that is still a bullish candle. I understand there's some sort of rejection on that level there, but I need a strong bear candle. I need a market to show me that there's some bears going on in that level. So I need the market to cancel that. Then I can enter the market to benefit from this move to the downside. So for that reason, I'm not going to enter the market. We'll just see what the market does. Okay, so that candle I like. Let me see if I can get a 1-to-1 from there to here. If we can do that, then I will gladly take this trade, even though it's already moved a number of pips. Let me see. Okay, so we can break even before we get to our 1-to-1. That's fine. I'm just gonna target my 1-to-2 and see if we can hit our take profit. But yeah, let me just adjust that. 1-to-2, there we go. So let's go for that. We'll see how it goes, but we're just here to execute our strategy the exact same way, day in, day out. Now some days you're gonna hit take profit, some days you're gonna hit stop loss like that, but it is what it is. Okay, so we just hitting our stop loss there. Let's count how many trades we've taken so far, because I've lost count now. 1, 2, 3, 4, 5, 6, 7, 8 trades. Okay, so we still need to take 2 trades, and we just taken a loss there. It is what it is. Now looking at the market now, if we break that level there, because that is our key level, if we break that level there, right, I'm gonna wait for the market to come back and retest, give me some sort of a reaction there so I can buy the market to the upside. Or I would like to see a red candle canceling that behavior, then I can still take the sell to the downside. Whatever the market does, the market will do. We're just here to play the numbers game. So let's just continue and see what happens. Okay, so we didn't get a cancellation of that candle there, so for that reason I'm not going to take a trade. Okay, I like that in terms of the sells. If I can get one more push to the downside, at least closing below this week here, because this shows some bulls in the market. So if I can get a red candle canceling all that behavior there, then I can take a trade. But let's just see what the market is going to do. Okay, we didn't get that. So looking at the market now, it looks like our only move is to get a push to the upside, take the retest to benefit from the move to the upside. But we're going to see if that's what the market is going to do. Ooh, okay. So looking at this, obviously we wouldn't have that candle there. I just want to be as honest as possible. I would have definitely taken that trade. It's just that now that I see what happened after that trade, and then I would hesitate a bit. But we won't have this day when we're trading the live markets. We will only see what happened on that day there. So for that reason, I'm going to take the trade, because I would have taken the trade anyway. So if it hits my stop loss, then it is what it is. But for that reason, I'm going to execute the trade and target my 1-to-2, because it fits my, okay, there we go, 1-to-2. It fits the strategy, right? It's a key level and the market just reacted to that, so I'm going to take a trade and see what's going to happen. Okay, the market hasn't taken me out yet, but I don't like that the market is playing above this key level here. But let's see what's going to happen. Okay, I like that this candle has just cancelled all that noise, so let's just see what's going to happen. Okay, looks like we're going back up. Ooh, I think we just got and stopped out. Yep, so that's another loss. That's 2 losses in a row. I mean, I know this is back testing, but you know, I don't like losing. Now I see what the market is doing now. If I get another push to the upside, and then my only option is to wait for that retest so I can buy the market. But looking at the market, because this really did represent a huge sell in the market, so it wouldn't make sense for me to get that sell and then immediately cancel it with this candle here. If that was the case, then the market could have cancelled it with a candle just next to it, right, showing me that there's still some bulls in the market. So looking at that price action there, I would like to see a big red candle, and I'm talking a huge red candle, to show me that there's still some sellers sitting on that level there. But if not, then our only option is just to wait for a retest. But if I get a red candle then I can still go ahead and execute and aim for my 1 to 2 and see how it goes. Oh, we left with one trade anyway, because we're left with 8, right? And this was 9. Okay, so we better win that one. But if we don't win it, we'll just count how many trades we've lost and how many trades we've won, and see if we made some money. Okay, that's a doji. I like that, but I would like to see some sellers coming in the market, you know. I want to see some sell action before I can sell that, because looking at it, it might as well go to the upside, and then I'm going to wait for the retest. Let's just keep playing. Ooh, I like that. I like that a lot. I'm going to take that without any hesitation, with my stop loss above structure, and I'm going to target my 1 to 2 as usual and see how we're going to do. And this is our last trade, guys, right? So we better win that. Let's just see what happens. Okay. I don't like that, but okay. Ooh, I like that one. Okay, let me just speed this thing up. Okay, I like that. Now the market is approaching a key level. I know this is our last trade, but if I can get some sort of a reaction there, I'm gonna give you guys this as a, in my country we say a banzela. I'm gonna give you this as a banzela, as a bonus, right? Okay, so we're just gonna boom. I think we've hit our take profit there. Let me see, is that a week? Oh, definitely we've hit our take profit there. So we won that trade. That was our last trade. We won that trade, but if I can get some rejection there, I'm definitely gonna take. Ooh, I like that. I like that. As long as I can break even before I get to my 1 to 1 there, and then I can take that. Definitely can take that. Let me see, stop loss below structure. I can 1 to 1 before I get to my key level, so that's fine. I'm gonna take 1 to 2 in hopes that the market is not gonna react on that key level there. But I'm gonna go for my 1 to 2 and see how that's gonna play out. There we go. And this is my bonus to you guys, right? Whether it loses or wins, it will still count against me or for me. So we're just gonna see how that plays out. Okay, it looks like it's going in my direction, and we've already broke even actually here. So I'm going to move my stop loss to break even, so that if the market comes back, then I'm not losing anything. But let us see what happens. Okay, I like that, but the market is reacting to our key level. So for that reason, the market might not push up to hit my target. It might just reverse from there. For that reason, I'm going to move my stop loss further to collect more profits there, right? And see what the market is going to do. Okay, the market hasn't taken me out yet, but it's definitely retesting. Okay, now we are out, right? So now we're out of the trade with partial profits. I wouldn't say we won that trade, really. It's just small profits. We'll see how it goes, but we didn't lose any money, right? So since that was my bonus to you guys, I'm just gonna look to take one more bonus. Right? So looking at the market there, I'm waiting for the market to get back to these levels here and react, and then I'm going to take that sell, or as you guys know, I'm going to wait for the market to get back to the key level here, react, so I can take the buys. Either one of those situation, I'm going to benefit to the market, or the market might break to the upside, and I'm going to wait for a retest, reaction, execute, and benefit from that. And same thing to the downside. If it doesn't react there, or if it doesn't reject that level, then the market is going to break. I'm going to wait for that retest, then I'm going to execute to benefit from this move to the downside. We'll see which one is which, traders. Anyway, let's just continue our process. Okay, so the market is going up again. Looks like we moved our stop loss too soon, but it is what it is, as long as we didn't lose any money. So that was going to be a win. But as long as we didn't lose any money, we made some few profits. That is fine by me. Now looking at the market there, I'm just waiting to see if I can get some rejection. If I can get some rejection to the downside, I'm definitely taking a sell. to these levels here. Okay, I like that, but then this week on the downside, it convinces me that there's too much buyers in the market. So I don't like that unless I get the market to retest that level and then react again, so I can take that. But at the moment, I'm not buying what the market is doing there, so I'm not gonna get involved in that. Okay, now it has corrected that move. If I can get a rejection, then I can take the trade, right? Okay, those are buys. I don't like that. Okay, so it looks like we've broken this level, so the only thing that I'm waiting for now is a retest. If I get some reaction here, then I'm going to buy it to the upside, or alternatively, it's going, our next stop will be that. Alternatively, I'm going to wait for the market to just push to the upside and see if I'm going to get any reaction when we get to that key level there, so I can sell it back to the downside. Whatever it is, guys, I know this was supposed to be a bonus, but it looks like now we've entered another trading session. Okay, so the market is coming back to retest. Let's see if we're going to get any. I don't like that because it didn't really push to the downside, and this thing has a wick on the upside. I don't like that. I need a deep pullback to these levels here so that I can execute to the upside, right? And this is a daily, so the distance between here and here, it's a lot of pips, right? So that's why I'm waiting for the market to pull back in deep into the level. Okay, so it looks like we're not getting that. Okay, now we're correcting that move. Okay, now we are back inside the zone. I think the market is going to continue pushing to the downside. Let's just see what the market is going to do, right? Okay, so now we are canceling that move. I like that because the market came back to retest and immediately we got our bullish behavior right on our key level. So for that reason, I'm going to take that as a 1 to 2 and see if I'm going to hit take profit. Remember, this is my bonus to you guys. So if this hit take profit, make sure to subscribe and like the video, and just tell me what you think about a strategy on the comment description, guys. Okay, I like that the market immediately pushed to my direction. Now looking on the left, I see there's some sellers sitting on that level there, so for that reason I'm gonna move my stop loss to break even, so that if the market comes back down, I'm not losing anything. Let's just continue to see what the market is going to do. Okay, so the market is continue pushing to the upside. I like that. Let's see if we can hit our take profit. Okay, it's reacting to next to a key level, so for that reason I'm going to move my stop loss to secure more profits there, because remember, traders, as traders, we are risk managers. You must always worry about how much you are risking first before you can worry about how much you're going to gain. So it's important to always secure some profits, so that if the market decides to come back, then I won't be affected, right? Let's just see if we're going to hit our take profit or we're going to come back. Okay, so the market has pushed, breaking above this noise here. Now I feel really confident that we're going to hit our take profit, but I'm not playing any games here. I'm just going to move my stop loss to secure more profits and see what we're going to do. Boom. And that is the end of our trading session. So let us see how many trades have we taken and how many trades have we won against the trades that we have lost, right? So let's just count here. We have taken 2 trades here, 1 2, we won 1 and we lost 1. Let's just do our math here, right? Just so I can show you guys that this strategy is really profitable, and I know this because I have been trading this strategy for over a year now, and you know what, it just keeps on giving. But let's just count. In fact, we can do this by our heads, right? I mean, as forex traders, we deal with numbers the whole day, so it's really important to be good with numbers here. Let's say for every trade we risk 2%, right? That means for every trade that we lose, on $100 account, because here I'm talking to the broke trader. I'm talking to the trader who doesn't have anything in their name. And by the way, if you don't have anything to your name, I'm going to leave a link in the description. It's a link that's going to take you to XM Broker. Now, I don't have to tell you guys how reputable XM is. It has been around for decades and decades. They've won many nominations. So this is a really trusted broker. And what XM will do is they're going to give you a $50 welcome bonus. You don't have to deposit anything. Immediately you register your account, immediately you open your account with XM, you're going to receive a $50 welcome bonus. Now, at the time of this video, the promotion is still on, but that's just a promotion, guys. When I registered for an XM account, I got a $30 instead of $50. So just make sure you take advantage of this $50, guys. If you have $50 in your pockets or in your bank account, you make sure you grab this free $50, combine it with your own $50, and you have a $100 account. And if you haven't watched my video where I explain to you how to make a living with just $100, I'm going to leave that in the link in the description. But that was just a quick plug, guys. Make sure you grab that free $50 in the description, because this will make a huge difference in your account. So let's say you have $50 right now in your account, and you grab the free $50 in the link in the description. Now you have a total amount of $100, right? That is all you have to trade with. And let me tell you, traders, this is enough to make a living. Now, let's break down the numbers here. We're risking 10%, we're risking 2% on each and every trade from our $100 that we're going to be trading, right? $100 account, we're risking 2%. That means for every trade that we take, we're going to lose $2, but when we win, we're going to win $4, right? And that's what we've been doing in this strategy. So let's count the numbers. We took one trade here and we lost. That's minus $2. Let me write this really. Minus $2. We took another trade here and we won, so that is plus $4, right? And then after that trade, we didn't get a trade here up until here, and we won both trades here, right? So that is 4 plus 4, right? We won one trade, which is $4. Then we won another $4, right? Then we continue with the count. We won $2 here. We took another trade here and we won, right? So plus another $2, right? We won another trade here. Not $2, man. Come on, man. This money is too much, be confusing me. You feel me? That's another $4. And we have another $4 there. So that will be $4. Let's not get confused here, guys. So $4, $4, $4, $4. That's what we have here. $4, $4, $4, $4, $4. Wait, yeah, there we go. All right, so we are on track, right? We just won that trade. That was a $4 there. Then we got another trade there. That was another $4, right? That's plus $4. That is that trade. And then we lost a trade there. That is minus $2. We lost another trade there. That is minus $2, right? That is the trade that we lost there. But after that, we won another trade. So that will be, where's my numbers? That will be another $4, right? That is $4 there. And then this one, we can't really count how much we won there. We'll just count it as a break even, as long as we remember that we didn't lose anything on this trade here, right? We actually took some profits off the market, but it's so small, really so insignificant that we don't want to count it in these numbers, because we don't want to confuse ourselves. So we're just gonna say we didn't make a loss there, nor a profit. So that was just a break even trade. Let's move on to the next one. And the last one was 4. So we took another $4 out of the market there. Let us check that. So that was another $4. So how much did we really make? Ooh, look at that. So how many trades did we take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades. We took 11 trades, and wait a minute. Okay, we took 11 trades, right? We took 11 trades and we lost how many trades? 1, 2, 3. We lost 3 trades. Out of 11 trades, guys, we lost 3 trades. Think about that. Out of 11 trades, we lost 3 trades. So that means we won what? 8 trades, right? Am I right? Is my maths right? 11 minus 3. 8 trades. So we won 8 trades, right? Now, I know you're excited now. You can't wait to try this strategy. My best advice to you is you need to try this strategy. You need to backtest this strategy first before you can start risking your own money. You need to get into the chart, go back in time and start backtesting the strategy and see how many wins it's going to give you and how many losses it's going to give you. And as you saw this strategy in action, guys, if you do it right, there is no way you can avoid being profitable. So that was my strategy for you guys. That was my gift to you guys. I hope you really enjoyed the video. Make sure to give me a like, man, and subscribe to my channel because I'm going to be dropping gems like this on a weekly basis just to make sure that we eat together in these markets, because I've lost a lot of money in trading and I lost a lot of money for a very long time, you know. And once I started being profitable, all I ever wanted was to share this knowledge with the world.